Hello and welcome to our Worksheet S-10 provider training. My name is Chris Severson from Wisconsin Physician Service, and we're going to be covering a few items related to this worksheet and some of the new uses of the data in that worksheet. So for an agenda, first of all, we're going to be talking about an overview and purpose of this worksheet S-10, what exactly we use it for, why it matters now. We're going to be talking specifically about line 20, columns 1 and 2, dealing with charity care charges. We'll talk about line 22, again, columns 1 and 2, dealing with the payments. And then we'll talk about the special lines 24 and 25, dealing with the Medicaid length of stay limit and how that relates back to line 20. And then we'll spend some time with line 26 and the total bad debts. So as a background, Worksheet S-10 has been around for a number of years, but it has evolved over the years, and it's only been used for payment purposes in recent years. The first use is the EHR high-tech incentive payment for the acute care and critical access hospitals, and the current use is for helping to calculate Factor 3 for the DSH Uncompensated Care Payment, the DSH UCP. So we have Factor 3 there for that, and that's really what we're going to spend most of our time talking about today, is how that impacts the DSH Uncompensated Care Payment. Now, the other thing to bring up here is that there were clarifying cost reporting instructions, really changes issued for cost report periods beginning on or after 10/1/16. So that would be our current years, that would be the years that are under review or under audit at this time. And these changes impacted two lines, line 20 for charity care and line 22 for payments. It impacted when certain things should be reported, the amount that should be reported, or how to calculate that amount, how to gather that amount. But it did not impact line 26 for the bad debts. So we're going to see how this all impacts everything. If you take a look at line 20, we're going to see it in detail later on, but here are the cost reporting instructions for Worksheet S-10, as you can see right here. Line 20 for cost report periods beginning prior to 10/1/16. So if you recall the instructions, it basically says for line 20 that we're reporting the full charges for those patients, regardless of the amount that was covered for charity care. It's the full charge for that service, and that impacted what payments would be reported as well on line 22. In that case, only the expected payments, the patient liability, whether they paid it then or not, was to be reported to offset it. So that was the last year's audits. But for the current year, the cost report periods beginning on or after 10/1/16, these are the actual charity care approved amounts only. And again, we're going to see this later. But for those charges reported on line 20, now we're just talking about the amount that was actually approved for charity care. And as a result, the payments that get reported on line 22, they only need to be actual payments, not expected payments or other patient liability, just the actual payments from that patient for the amount that they were written off for charity care. So we'll see an example of that later and what that really means. The other thing you can get from these cost reporting instructions is the breakdown between column 1 and column 2. For column 1, generally this is for the uninsured patients, so it's the charity care charges for uninsured patients. There are a couple of exceptions to that we'll talk about. Column 2 is generally deductible and coinsurance for the insured patients, and again there is an exception there as well. So we will talk about this in more detail, but I just wanted to point out where those cost reporting instructions are coming from. So if we take a look at the federal fiscal year 2020 Federal Register final rule, and that just came out here in August of 2019. And originally, in the proposed rule that was issued in April, there were two alternatives to how CMS was going to set the fiscal year 2020 rates. And those rates, when we use the phrase fiscal year 2020, federal fiscal year 2020, we're talking about starting 10/1/19 for the rates starting 10/1/19 going through 9/30/20. So the alternatives, and they were asking for public comment, the alternative was to either use the federal fiscal year 2015 data That would be cost report periods beginning 10/1/14 through 9/30/15. Some of those cost reports had been audited by the time of this rate setting. And the other alternative was to use federal fiscal year 2017 data, cost report periods beginning 10/1/16 through 9/30/17. There was never a proposal to use federal fiscal year 16 data. Part of the reason for jumping to 2017, or at least that proposal, was that it would be the newer instructions under the cost reports. Now, the final rule, after public comment, adopted the 2015 rates that were at least audited to some extent. Some of the cost reports that had the higher amounts of charity care reported or something else was flagging out for review, hit a certain threshold. So we have the cost report periods beginning 10/1/14 through 9/30/15. That's the data that's going to be used to set the federal fiscal year 20 factor 3 for that uncompensated care payment. Now, the federal fiscal year 2017 data, even though it's not being used for this coming year's rates, effective 10/1/19, it's going to be used for eventually for a future year rate. At least that's the thought at this point. I shouldn't say that's finalized because it'll have to go through its own notice and public comment period. But in any case, these years are currently under review. Same as how the federal fiscal year 15 cost reports were selected. The federal fiscal year 2017 cost reports went through that same analysis to determine which ones would be reviewed. Now, ultimately, when you look at Worksheet S-10, it's line 30 that is going to be used for that uncompensated care payment, and we'll see where that line comes from and what it looks like. But basically, it's the sum of line 23, which is your charity care after subtracting out the payments. So it's the uncompensated portion of the charity care. And they're adding in line 29, which would be the total bad debts. So if we take a look here, for line 20, we're actually reviewing these. The providers, of course, import this into the cost report. Line 20 would be the actual charity care charges and the uninsured discounts for that facility. And earlier we saw how this was split to uninsured in column 1 and insured in column 2. And then, of course, column 3 is just a total. Line 21, well, we'll see this later, but basically it's the underlying cost of those charges. Now, for column 2, the amounts reported were deductibles and coinsurance. So that amount generally falls down to column or to line 21. That's the same amount that's going to be used there. There are some exceptions, and we'll talk about those in a bit. But with the uninsured, what happens is the line 20 charity care charge amount gets multiplied by the line 1 at the very top of this worksheet. It gets multiplied by the cost to charge ratio that flows over from the rest of the cost report, worksheet C. The idea here is that the cost to charge ratio reduces any charge amount down to its expected or its average cost, its underlying cost, if you will. So in this case, the underlying cost of these charges for these services that were not compensated, the underlying cost is $684,570. So these are the amounts that are flowing through. These are uncompensated costs at this point, but some of them were actually paid, so they were compensated. Line 22 would be the payments received from patients for amounts previously written off as charity care. So what happens here is these are payments that patients have made for amounts that were already written off to charity care for whatever reason. It doesn't include all patient payments. It's only those patient payments that they were trying to pay off their bill, even though it had been approved for charity care at some point. So line 22, again, is just the amount of payment related to a charity care approved service. And it's also, as we'll see later, it has to be from a prior year. If the payment was received in this current year of this cost reporting period, then that amount actually should not have been reported as charity care, and therefore it would not need to be removed through line 22. It should be removed from both lines and not reported at all because it wasn't uncompensated by the year end. That's the point there. Line 23 is the remaining true uncompensated cost of that charity care. Now, line 24 and line 25, this particular screenshot I've provided does not have any, and therefore line 24 is no. Line 24 asks for situations where there were patient days that extended beyond the length of stay limit for a Medicaid or other indigent care program. In those situations, assuming the provider's policy allows that to be written off for charity care, then that charge amount will still be allowed to be reported on Worksheet S-10, but it's going to be reported under the Insured column 2. So even though that particular portion of the stay was not technically covered, the patient themselves was insured through Medicaid. So it's going to go into the insured column, and what will happen is, since that portion now relates to an actual charge amount, even though earlier I said that the insured patients generally have deductibles and coinsurance which do not need to be reduced, in this situation, this is that exception I was mentioning. Any charge reported here, and so if you answer 24 as yes, the charge would actually go on line 25. Any charge reported there also needs to be in line 20, column 2. The only reason it's reported in both places is so the cost reporting software knows how much of this line 20 amount to multiply by the cost to charge ratio to reduce it down to cost. In this situation, there were no line 25 items, so none of the amount in line 20 was multiplied by the cost to charge ratio. If we had, let's say, $5,850 in line 25, that $5,850 was also in line 20, and only that $5,850 would have been reduced, so that would have made line 21 a smaller number. It would be $70,000 plus $5,850 multiplied by the cost to charge ratio, whatever that happened to be. So that is how line 25 comes into play. Again, we're going to see some examples. We're going to see some detail with these later on. Line 26, we only have one column, and this is for total bad debts. So there are a few things to stress with this line. It includes Medicare and non-Medicare bad debts. Both must be net of any recoveries. So if a bad debt or if an accounts receivable is written off to bad debt, but then the patient later paid, then they should be netted out. That recovery should offset the total Medicare or total bad debt, just like it would Medicare bad debt on Worksheet E Part A, Worksheet E Part B, whatever settlement worksheet you're dealing with. Now, I said that line 26 should include both Medicare and non-Medicare, even though you've already reported Medicare bad debts on one of those other settlement worksheets, and that's fine. Line 27 and line 27.01, they bring in those amounts from the other worksheets, again, E Part A or E Part B, etc. They flow in there to do the calculation below, because what happens is, yes, you're reporting the total amount in line 26, but the portion that you've already been reimbursed for through Medicare on E Part A or whatever, that portion is going to be carved out. Now, with bad debts, the legislation and the regulations have required a reduction in bad debts that's currently at down to 65%. So you get reduced 35% down to 65% for your Medicare bad debts. That 65% is the portion that's going to be reimbursed. So the other 35% is the portion that's not compensated. That is the portion that ultimately is going to flow in to be added to all these charity care and other items. So that's what we're doing in this particular line. One of the subtotals we want here is line 28, which is listed as non-Medicare bad debt expense. So this will be line 26, total bad debt, minus line 27.01, which is the Medicare allowable bad debts. Now, these are the amounts reported on E Part A, E Part B. All of them are summed up to be reported on line 27.01. So in this case, it was $1,247,761. You don't have to enter that. It flows over from those other worksheets. Now that's the Medicare reported amount. It's called Medicare allowable. That doesn't mean that's the amount that the provider was reimbursed, that 65% amount. That 65% amount is actually on line 27. It seems a little backwards that they put 27.01, the larger number, after that, but that is how it is reported. So in any case, for line 28, we're looking for what is the non-Medicare portion. We want to carve out the Medicare portion altogether. So we're taking line 26 minus the amounts that flowed in onto line 27.01. That's our starting point. That's the non-Medicare bad debt. That's going to be a factor, but then the portion, the 35% portion that was not reimbursed by Medicare, that's also going to be added in here as well. And that amount actually gets added into line 29, cost of non-Medicare and non-reimbursable Medicare bad debt expense. The one thing I do want to mention here is that we had that line 28 item separated out, non-Medicare bad debts. Those are multiplied by that line 1 cost to charge ratio to reduce them down to cost. So that's why line 29 is a smaller number. It's going to be that non-Medicare bad debt multiplied by the cost to charge ratio to bring it down to a lower amount. Plus we're adding in the Medicare, the non-reimbursable Medicare bad debt expense, that 35% of the amount that was on line 27.01. Another way of looking at it is it's line 27.01 minus line 27. So that's what we have there. That's the underlying cost on line 29. And then line 30 takes that cost of the bad debts and adds it to what we had back on line 23 with the charity care after reducing it for the payments. So line 30, as I said earlier, is going to be the total amount that's used. Line 31, it might be used in the future. It might be used for other programs, but at this point, Medicare does not use line 31 for the DSH Uncompensated Care Payment, at least. So now let's take a look and dig deeper into the information that needs to be input to the cost report and what support we're looking for. This might help you in future years to know what information to keep and submit. One thing I do want to mention before we get started here is that the term charity care is in many cases used synonymously with financial assistance policy. So for our purposes, we're treating them as the same. A charity care policy, a financial assistance policy, just to reiterate that. Now again, we're on the cost report periods beginning on or after 10/1/16. So you have to read the instructions. They are somewhat lengthy because they talk about each of the columns. So we really want to pay close attention to that as you're trying to report the proper information. So I'm actually going to read through these instructions and point out a few things. So the first sentence, enter the actual charge amounts for the entire facility except physician and other professional services. So that's the first thing. We need to make sure those are removed. Those are not allowable on the cost report, physician or other professional services. Of uninsured patients who were given full or partial discounts. So this is the key thing. We want to know the amounts only for patients that were even given a discount for charity care. And we're going to find out later that we only want the amount of that charity care reported here. So partial discounts that were, number one, they have to be determined in accordance with the charity care policy. So whatever the hospital has for a charity care policy. Two, this is important as well, they have to be written off during this cost reporting period, regardless of when the services were provided. So they could be services from this year, written off this year. They might be services that were provided toward the end of last year, and it took a while to write them off to charity care. But for the instructions 10/1/16 and after, they have to be written off during the cost reporting period to be counted. So that's a key thing. Also, do not include charges for patients given courtesy discounts. So we're not going to allow those courtesy discount versus a charity discount. Courtesy discounts are not allowed. They're for certain groups of individuals. Sometimes they're given to clergy, sometimes they're given to, I don't know, the maybe family discounts for physicians or other hospital staff. Things like that have nothing to do with the charity care policy, so they're not allowable. Or charges for uninsured patients with or without full or partial discounts who do not meet the hospital's charity care criteria. So it doesn't, if they don't meet your own charity care policy, they're not going to be allowable. That's what we're saying there. Charges for non-covered services provided to patients eligible for Medicaid and other indigent care program, they're allowable, including those charges for days exceeding the length of stay limit. So remember, that's what the line 24 and line 25 we talked about a bit ago. Those can be allowed as long as your policy states that you allow them. You can approve them for that. If it's not in your policy, that's a general rule. If it's not spelled out in your policy, they're not going to be allowable on Worksheet S-10. That's a key thing we look at. So enter in column 1 the total charges or the portion of the total charges that were written off to charity care. So again, this is different than the last year. We only want the amount truly written off to charity care. For example, if the patient had a $1,000 service, but you only approved it for 70% charity care, then only $700 of that should be on line 20. The other $300 would not go anywhere. The other portion is not charity care. That's different from the prior years. Column 1 is for uninsured patients, as we said, but it also includes those patients with coverage from an entity that does not have a contractual relationship with the provider, assuming that also is in your charity care policy. So yes, the patient may technically be insured, but that insurance company is not accepted by your provider. You're not in their network or whatever the case may be, so that they would be considered uninsured for these purposes. We will also allow in column 1, the uninsured column, charges for non-covered services provided to patients eligible for Medicaid or other indigent care programs if, again, it's in your hospital's charity care policy. So non-covered services. So again, the patient is technically insured because they have Medicaid, but they're not insured for that particular service. So it's going in the uninsured column, which would be a charge amount anyways. So that amount would, of course, be reduced by the cost to charge ratio. And again, there's another reminder. The total charges or the portion of total charges is the amount the patient is not responsible for paying. If they get written off to 100% charity care, then it would be 100% of the charges. But if they only had a 70% approval, like I said earlier, then it's just going to be 70% of those charges reported in column 1. So we're going to see column 2 later by itself. We've just read through the first section of the instructions. Now I want to point out some of the things again as a repeat. This is basically for uninsured patients, but we said it can also include those charges for patients that have insurance, but the insurance company doesn't have a contractual relationship with the provider. As I said, and I'll repeat multiple times, it has to be in your charity care policy before anything would be allowable. We also talked about the non-covered charges for Medicaid, only if it's in your policy. Now, the other point about that, though, we're talking about Medicaid here. Earlier in that line 24 and line 25, we said that we have those that exceed the Medicaid length of stay limit. Those actually go into column 2. So if it's a non-covered charge, just a regular non-covered charge, it can go in column 1. But if the reason it's non-covered is due to the fact that it has exceeded a length of stay limit, then it goes into column 2. It's just a little technicality in the cost reporting instructions. It's still a charge, but as we saw earlier, it would be subject to the cost to charge ratio, even though it's in column 2. So we'll talk about that in the column 2 slides. Again, only the portion written off to charity care. That's the first thing. It's the amount written off to charity care, and it has to be during this cost reporting period. This is different than the older cost reports that used service dates to determine when to write it off. Now we use write-off dates. And again, it's the charity care portion only that we're looking for now, whereas in the past it was full charges. We already said you cannot include courtesy discounts or physician or professional services. However, if you have a self-paid discount or an uninsured discount, that can be allowable, again, only if it's in your policy. So it has to be in the provider's policy before it's going to be allowed at all. Now, I said earlier as well that if the payment is made in the same year as the write-off, then neither the charity care or the payment should be included. They should both have been removed. They cancel themselves out. So the only payments we're looking for are for charity care charges that were written off in a previous year, but now they're paying. So we're reversing, just like a bad debt recovery, it's reversing prior year bad debts. We're only concerned with the payments toward that charity care amount. In that example where we had a 70% approval for charity care, if the patient is paying money, it's first assumed to go to the 30% that they actually owe. If they paid more than that, then they start paying toward the amount that was previously approved for charity care. It's that amount toward that charity care portion that we're looking for in line 22. Now, there is one important piece I want to mention here that's not really spelled out in the cost reporting instructions, but we have seen a few examples of this. You may have a claim, and it's not a Medicaid claim. It's a claim for an insurance company or whatever, but they might have been non-covered for some other reason. A portion of that claim is non-covered, and as long as it's not related to a physician or professional service, then the claim itself can be reported on S-10, both the covered and non-covered portion. One example of this might be some sort of exhausted benefit situation for that insurance policy where they've just, during that stay, they exhausted their benefits. Or there might have just been some services that weren't covered by the plan, but ultimately the patient was insured. So the question is, where do you report the different portions of that? You always have to remember that column 2 is the insured portion, and generally, except for that one exception with the Medicaid length of stay limit, other than that, generally the column 2 amounts are just the deductible coinsurance portions that do not need to be reduced by the cost to charge ratio. Anything reported in column 1, which is usually an uninsured amount, does need to be reduced by the cost to charge ratio, because that's a charge amount. It's not a cost amount. So what happens here is when you have these exhausted benefit or whatever other example that happened mid-stay, or they're just a portion of that stay, but the patient was still approved for charity care for that, you're going to have to split this claim, and the portion that is the non-covered portion or the exhausted benefit portion, that charge amount needs to be reported in column 1, and the covered portion is going to have a coinsurance or deductible amount. That portion needs to be reported in column 2. So the important thing to know is that you're going to have adequate documentation to show the total amount of that claim and how you've split it, especially to make sure that the portion you're reporting as charge is only the charge for the non-covered portion. You don't want the charge for the other portion of the stay that was covered, because that amount is, we only want the deductible coinsurance related to that portion of the claim. And again, this treatment, this splitting of the bill, does not include that Medicaid length of stay limit, because when CMS wrote the cost reporting instructions, they built that mechanism on line 24 and line 25 to handle that particular example. However, they have stated to us they do not want us to use that mechanism for any other non-covered claim situation. So I don't know if that means they are using line 25 to identify Medicaid information. Maybe they're using it for another purpose. But in any case, they've made it clear that we should not be reporting other non-covered portions in line 25. So the only other way to report it properly is to split that claim, as I've said here. So that takes us through column 1 for the uninsured claims. Let's move over to column 2 for the insured claims. Now, the first and third paragraphs of the cost reporting instructions really come into play. We did already talk about the first paragraph, and we covered the second paragraph. Column 2 It says enter in column 2 the deductible and coinsurance amounts required by the payer for insured patients covered by either a public program like Medicaid or a private insurer with which the provider has a contractual relationship, because otherwise it's not covered, and it has to be written off to charity care. But in addition, enter in column 2 the non-covered charges for days exceeding that length of stay limit for the patients covered by Medicaid or another indigent care program, if that inclusion is specified in the hospital's charity care policy. Do not include in column 2 amounts of deductible and coinsurance claimed as Medicare bad debt. So that's a very key statement, that last piece that we'll talk about a little bit later. The first thing to note here with column 2 is that this is basically for insured patients, whether they have private or public coverage. We should only include the coinsurance and deductible amounts. You're never going to report a charge or any other amount like that. But you can also include those non-covered charges for the Medicaid patients that exceeded the length of stay limit, as we said. As we've repeated multiple times, it has to be in the provider's charity care policy before any of it would be included. So we only want the charge related to that non-covered portion due to the exceeded length of stay limit situation. So even though generally speaking column 2 is deductible coinsurance, there's going to be a charge amount included in that overall total as well for just those claims. So that's the only situation. If you look at a list of all of your column 2 charity care write-offs, that's the only time you're going to have a charge is when it's that exceeding length of stay limit. However, that exact same charge that is already in line 20 column 2 must also be included as part of line 25. So you could have $100,000 in line 20 for all of your charity care claims, but maybe there's only $1,000 of this exceeded length of stay limit. So that would be part of the line 20 amount, but just that $1,000 is also going to be reported on line 25 separately. Only the portion actually written off to charity care during this period is going to be included, and we've already talked about that. And again, if the payment is made in the same year as the write-off, we don't want to see either of them on Worksheet S-10. Again, no courtesy discounts or physician professional service amounts can be reported. Now, that last instruction that we read in the cost reporting instructions dealt with Medicare bad debts. It said you cannot include deductibles and coinsurance related to Medicare patients or Medicare bad debts. So what that specifically means is that, first of all, generally you're not going to have any Medicare patients in your line 20, column 2. And I say generally because usually if those were uncompensated, that would generally be written off as a Medicare bad debt to be reported on Worksheet E Part A, E Part B. And again, that would already flow, that other 35% of it that was not covered by Medicare would already flow to Worksheet S-10, line 27 and line 27.01. And of course, that would be part of the total reported on S-10, line 26. We're going to see the bad debts again later on. However, if there was a Medicare patient that you did not collect from, and you did not and could not write that off as a Medicare bad debt, there's the potential for that to instead be reported as charity care. However, due to the high-risk nature for duplication, the high risk of duplication for that, there must be clear evidence as to why you didn't write it off for Medicare bad debt, and that it could not be written off for Medicare bad debt now or in the future. So there are a lot of different requirements that must be met for Medicare bad debts to be written off, and you'd have to document why it could not meet those criteria to be written off for Medicare bad debt. Now, for those providers that were selected for the Medicare Worksheet S-10 audits this year, you probably received a template, an optional template that can be used to submit your data. The template itself is currently optional until that's been approved for required use down the road at some point, but it's currently optional. However, the underlying information is needed in whatever format you submit it in, whether you use our template or not. So I'm going to go through the different columns of this template to try to explain what this information is. Now, in the template you would have received, it would have been an Excel spreadsheet. So all the columns would be just in one row. I've just broken it up to show them all on one slide. So they do go left to right across. First of all, the insurance status. Is this an insured or an uninsured claim? Now, if you split your listing into insured and uninsured to begin with, then of course that would be easier. But if you did merge everything together, we certainly need to know whether it's insured or uninsured. Who is the primary payer and who are the secondary payers for this patient, if any? So then we have the payment transaction code. Now this would be something internal to your provider. You would have to show an index or a legend showing what these codes mean. But this might be something showing how it was written off to charity care. You might have a variety of reasons for charity care. So we'd want to see the code for that patient and have an explanation as to what each of the various codes mean. Of course, patient identification number. We need to be able to trace that down if we decide to detail test a particular line. We need to be able to see the information about that patient to ask for it. Then there's just general information, patient name, birth date. Social Security number would be important, especially, it would be important for as an identifier for any patient. This is part of what we're looking for when we do duplicate checks. We need to see this information. Again, if we needed a detailed test a particular patient, we would need this. Then patient gender, just all basic information about the patient. Admit date and discharge date, of course, for the claim. Service indicator, is this an inpatient or an outpatient service? Revenue code. Now this will be used in part to identify, was this a professional service, was it a physician service, or was it a hospital service? So we use that in part for that, but also if we want to detail test a particular portion of that claim, we know what to look for. Now, revenue code total charges for the claim. So this is, as the name implies, the total charges for that claim. Now, of course, some portion of that claim would have been required to be approved for charity care, otherwise it doesn't belong on the listing at all. But for a patient that's on the listing, for a claim that's on the listing, we need to see the total charges here. This, of course, is not the amount that's going to be reported on line 20, but we need to see this amount here as a starting point, and then we're going to identify what was the disposition of all of those charge amounts. Where did they go? Who did they get paid by? Or are they left over as uncompensated care? So the revenue code total charges for the claim. We need to see the date of write-off to charity care. So what day was it actually approved for charity care? We already know the service dates, admit and discharge. Now we need to see the write-off date, and it has to be within this cost reporting period. Now, column P is the total patient payments for the services provided. Now, the important thing I want to mention here is this column is not the amount that goes into line 22. This is just total patient payments altogether. Remember that here, for this listing, these were total charges for that claim. Some of them were approved for charity care, some of them were not. Some of them were covered by an insurance company, as we'll see in just a bit. So the total charges, what amount did the patient pay? What amount did a third party pay? And then R, was there a patient charity contractual amount? This is actually what we're looking for on line 20. Out of this entire claim, how much was approved for charity care based on your policy? So that's one more subtraction of those total charges. It's one more disposition. But there might be other contractual amounts, insurance contractual amounts that nobody's going to pay. There might be a courtesy discount that's not allowed. So there might be a variety of other things that are happening to this claim that are they're not being reimbursed, they're not being compensated. Now, the one thing I do want to mention here before we get to this column T is that if the patient paid everything that they were liable for, then if you take revenue charges or revenue code total charges and subtract out all of these other columns, you would end up at 0. because everybody paid what they were supposed to, or the amounts were written off as intended. But there might be situations where the patient was responsible for $1,000 but only paid for $700. So there's going to be $300 not really accounted for in this template. It's in the total charges, but there was never a disposition for it, because that's certainly not charity care, and there's just no other column for that to be allowed at this point, and that's perfectly fine. Column T is if you have any of those claims where you exceeded the length of stay limit for those patients that were covered by Medicaid, we need to report those non-covered charges there. And that's basically going to be part of the amount that's included in charity care. Assuming your policy allowed it, that would also be reported as your charity care. So it might be in both column R and T for that situation. So now the next question is, how are payments to be reported? These are patient payments we're talking about. As I said earlier, the payment situation is a major change from before 2016. The line 20 amounts pre-2016 were reported at the full charges, regardless of how much of that claim was approved for charity care. Because of that, the line 22 payment amount had to be payments related to the entire claim, regardless of how much the claim was approved for charity care. A lot of those payments probably went to non-charity care approved portions, and that was fine. But the other piece of that is that it had to be expected patient payments, whether they actually did pay or not. You have to be able to compare both at the gross level, the gross charges, full charges, and the gross payments expected of the patient. So that's the instructions. If you look in line 22, you see beginning prior to 10/1/16 or on or after 10/1/16. 2016 and after, we're only looking for the line 22 payments related to the approved charity care for line 20. So remember, line 20 was going to be just the portion of the claim approved for charity care. So line 22, which eventually offsets line 20, should only relate to payments against charity care approved amounts. Remember, as we'll see in this next slide, it's not related to charity care from that particular year, because if it was, then neither amount should be reported anyways. So it's only related to charity care charges from a prior year. The other piece to mention here is that the payments for a particular claim or a portion of a claim should be in the same column as the charges were initially. So if a patient at the time of write-off was an insured patient, then that payment against whatever non-approved charity care portion they had, when they make that payment a year later or so, it should be in the insured column as well. You don't want to switch columns. So that's the other thing to keep in mind. Whatever their claim was initially, that's where the payment should go. So let's take a look at a numerical example of this. If the patient had a $1,000 charge in 2018 cost report, but 75% was approved for charity care, the patient out of that claim is only going to owe $250. Now, if they pay, let's just say they pay in 2019, they paid $250 or anywhere up to $250, that's the portion they were expected to pay anyways. That's the non-charity care portion. So none of that amount should be reported on line 22, since it has nothing to do with the charity care approved amount. So let's say this patient paid $850 in 2018. Remember, they had a $1,000 charge. The patient owed $250 of that because the other 75% or $750 was approved for charity care. So if they paid $850, then what's going to happen is the first $250 of that wasn't even related to charity care to begin with, because that's the portion they owed. That was not a charity care write-off. They owed $250. So there's only $600 of that payment that is even left related to that charity care write-off. But the thing is, the charge was in 2018 and the payment was in 2018. So in that situation, this entire payment should be excluded from line 22, not reported there. And that $600 should also be removed from line 20 because it was paid that same year. So the next $600, yes, it was related to charity care, but it needs to be netted out of that line since it was the same year payment. So for this situation, we said they paid $850 out of a $1,000 charge. There's $150 left. That's going to be reported in line 20 as the charity care charge, and there is no amount to be reported as a payment in line 22. So the original $750 charity care minus the $600 that was removed because it was a same year payment. Now let's say they pay another $150 in the next year's cost reporting period. So notice $150 was allowable in charity care in 2018. Now in 2019 they've paid $150. Even though it was approved for charity care, that patient wanted to pay their entire bill, so they've paid it in 2019. There is no adjustment to charges needed in either 2018 or 2019. There was not a mistake. It was a charity care charge, assuming it was approved by the provider. So that's fine where it was reported as charity care charges. But now it's a next year payment, so it needs to be reported on line 22. That line 22 payment does indeed relate to a previously reported charity care, so now it's going to offset the next year's charity care charges, just like a bad debt recovery would. Now, that assumes the provider does not have some policy in place that required them to refund any payment back to the patient. We've heard of situations where providers have policies where if an amount was written off to charity care and the patient still tried to pay it, that it had to be refunded back to them. So that would be, of course, any sort of maybe a state law or any sort of requirements, internal or external, that required you to refund it, that would still be treated the same way. You'd pay that back and there'd be no payment to report. So now there's a separate tab of the charity care template that has payments. It deals with the payments themselves. There are a lot of similar columns. Insurance status, the payers, all the information. This first row is all the same information from the charity care. Service indicator, and then date of collection. When was this collected? What's the amount of cash collections? What were the total hospital charges for the services that are now being paid? Were there any total professional or physician charges for those services? Because remember, those would not have been allowed as charity care, but also any cash payment that goes to those charity care amounts shouldn't be offset either. We do also need to know the date of the original write-off to charity care. When was that claim that they're now paying? When was it originally written off? And what cost report specifically was it included on line 20? What is the patient's liability on that claim? Because remember, any cash payment that relates to a liability that was already the patient's, that does not need to go on line 22. It should not be offsetting a charity care charge. It's due to their regular patient liability. And also, were there any bad debt amounts written off for this claim? Because if an amount was written off as bad debt instead of charity care, in other words, the patient was expected to pay, and then after whatever period of time, they did not, so you wrote it off to bad debt, that cannot also be claimed as charity care. So that's the purpose of these columns and why we're asking for this information. So now we have lines 24 and 25. We talked about a little bit, but now we're going to see them. Line 24 is just a yes or no question. Does the amount on line 20, column 2, so insured patients for charity care, does it include charges for patients beyond a length of stay limit for Medicaid? So again, the charge would have already been included in this number, even though normally column 2 was deductibles and coinsurance. Have you included charges in there, yes or no? And if so, what's the amount? What amount of charges have already been included in line 20? You need to separately report just that portion here, because again, it tells the system how much of this $385,000 needs to be multiplied by the cost to charge ratio, because most of it usually is not. Just this little portion will be. So again, it's insured because they're insured by Medicaid. So it's going to be reported in column 2, but part of that claim is not really covered. The charity care portion for the deductible coinsurance amount, that's certainly going to be in line 20, column 2, as just coinsurance and deductible. But the amount outside of that length of stay limit, there is no deductible coinsurance for that. It's just a charge amount. So that's the portion that's going to be also reported in line 20, column 2, but it has to be separately reported as well in line 25 so that the system knows how much to calculate. So there's an insured patient. They're insured by Medicaid. It's going to be reported in column 2, but as we said, part of that claim is not covered. And again, like anything else in this worksheet S-10, it has to be included in your charity care policy for it to have a chance of being allowed. And finally, we move on to bad debts. And remember, we're dealing with total bad debts at this point. Both Medicare and non-Medicare bad debts, they both have to be reported net of recoveries. So any subsequent year payment that's made has to be netted against that year's bad debts. So only one column. There is no insured or uninsured split there. The instructions did not change for this. They were always the write-off date. That was always what determined when to include them. It was never a service date type of situation. So we're looking for the amounts written off during this period. And again, payments against bad debts, so the recoveries, they're offset in the year of recovery. So it's a write-off date for the actual bad debt. It's a payment date for the recovery. That's what determines what cost reporting period to report it in. Do not include physician or professional services, just the same as the charges that are not allowable. Now, the other thing is you cannot get a dual benefit for any particular claim. You cannot include a claim as both a bad debt and a charity care. The only situation that might pop up, we've seen it a couple of times, is when there was an amount written off to charity care, and then for whatever reason the documentation was incorrect, and it was later reversed. So there might have been a reversal of the charity care and in this year, and then the bad debt reported this year as well. So there'd have to be clear evidence as to what happened, why did it happen that way, but they both have to be reported in the same period. So you'd have to reverse the charity care this year and include the write-off of the bad debt this year as well before this situation could happen. We don't expect this to be very common. Now, the other thing about this, we're talking bad debts here, bad debts written off during this period. This is generally not going to match the bad debt expense that's in your financial statements or your working trial balance. And the reason for that is that, again, we're looking for bad debts written off during a period, whereas your financial statements, assuming you're using GAAP, generally accepted accounting principles, they're required to use an allowance method, which reports an estimated expense. Medicare essentially requires the direct write-off bad debt for the actual amount. GAAP requires an estimate of the uncollectible accounts. So they're two different mechanisms altogether, two different measurement techniques. Again, cost report line 26 is a bad debt write-off. So if this cost report is selected for audit, we do require a reconciliation. Now, what I mean by that is the amounts are not expected to tie, but we want to see the reconciliation showing why there were differences. There's perfectly good reasons why there are differences as well. So one example for the reconciliation that you could use, you could have a two-step example. So we're using accounts receivable as the asset that's going to kind of show the difference between those two. So we could start with, let's say, a 2004 ending accounts receivable balance. We want to know, we're trying to back into the write-off amounts, but notice that a bad debt write-off, that item is not included in a working trial balance or a financial statement if you're using GAAP. It's just not included there. It's never stated. So we're trying to back into this number. We know that there are a couple of different things that impact accounts receivables. Accounts receivables are certainly reported on your financial statements and working trial balance. So let's say we had a 2004 ending accounts receivable balance, which is also the beginning of the 2015 year's balance. We take that, the beginning balance essentially, plus we're adding any patient revenues on account. So claims came in, there were patient amounts that they owed, so of course that would increase accounts receivable, but then they're going to make payments, and those would offset accounts receivables. They would reduce it. They're paying their bill off. And then normally the other thing that is missing that would also reduce accounts receivables is a write-off. Because when you write off an accounts receivable under GAAP, you credit the accounts receivable to reduce it, and you debit the allowance for doubtful accounts, the allowance for bad debts to increase that. So the key thing here is that it's reducing the accounts receivables. So those three things impact accounts receivables, and that should get you to your ending accounts receivable balance. So if we know the beginning and ending balance, and we know the patient revenues on account, and we know the regular payments from the patient, then we can back into the write-off amount. So we have the write-off amount here, and then we take a look at those write-offs, the amount we just calculated. We subtract out any current year bad debt recoveries. Now what I mean by that is that they're recoveries made this year that may relate to a previous year bad debt. The thing is, those recoveries are not offsetting any of the amounts. They're not impacting the accounts receivables up here. The impact nets out to a zero up in this first reconciliation, but they will offset the cost report bad debt write-offs in the current year. We need to offset current year recoveries in this year of bad debts. We're also subtracting out physician and other non-hospital bad debts. Those could have very well been included in step one, but they're not allowable for Medicare S-10 purposes. We also subtract out any bad debts that are not related to patient liabilities. They could be bad debts to maybe other insurers. Very unlikely, but it could possibly happen. And then that gets us the bad debt that is allowable on the cost report. So some variation of this reconciliation would be needed if we are doing a review for that cost report. And finally, we have the line 26 template, if you will. So this is a very similar template to the charity care and to the payment that we reported earlier. A lot of the same information is included in this first row. And again, these are all column headings. So if you look at the spreadsheet, it's going to be all the way across. You're not going to have these two separate sections. Again, I'm just including this so we can see both of them on the screen at the same time. So we have the general data about the patient and the claim, and that goes all the way to column M. Column N is the date of write-off to bad debt. Column O is the patient payments for services provided. Column P would be any third-party payments for those services. Q is any charity care amount related to those same services. Because remember, we're including the revenue code total charges. So all of these other items cannot exceed that revenue code total charge. You can't have payments plus bad debts plus charity care exceeding the total charges that were allowable. That's the purpose of these breakouts, is to make sure you haven't accidentally over-reported something, one of your items. And then finally we have the patient bad debt write-off. So if you have a total charge, patient might pay some, the third party might pay some, there might be some charity care write-off for whatever reason, and there might be some other contractual write-off. The only amount left could potentially be a bad debt, assuming it met your policy to be written off as a bad debt, and assuming it was written off that period. So that takes us through the end of our worksheet S-10 discussion. So as these reviews evolve, as more clarification comes up, maybe more scenarios are identified, we'll provide more information as we can, as we get new information from CMS. But certainly if you have any questions, you can send them in to our portal, and we'll be glad to answer those, and we'll take a look at that. You can discuss the questions with your auditor as well, And if they have questions, they can escalate it to our review area as well. So thank you for your time today, and I hope this has helped to clarify what Worksheet S-10 is looking for and how to report information and what we as auditors will be looking for as well. Thank you.